Good morning, everybody. It's Bryan Caprice, and today is your Monday morning market breakdown, not Wednesday. We had this from last week. Make that quick change. There we go, Monday morning again. See, that coffee hasn't quite kicked in yet. So I want to welcome everybody a good 4th of July week. I can't believe it's July already. It's absolutely amazing that the time has been flying by this much. Definitely had some movement over the weekend. We had some tweets, and, as we mentioned last week, the G20, when Trump and Xi were going to talk, they could have, provided some fireworks. And I think this week we'll see some kind of lingering trails of those types of tweets, of things going, excellent and not going excellent. And again, I think it's a lot of political maneuvering back and forth. But I think we'll see more. I think there'll be some market movement. So going into this week, one thing we have to be, cognizant of is that it is July 4th week. I last week was thinking it was Tuesday, but it's actually Thursday this week. But that will affect this week because a lot of people are on vacation, getting the extra days because of where 4th of July is sitting. People actually started going out last week trying to get the extra days, but we're going to see it even more this week. So volumes will definitely be down this week. But when there's low volume, that also means that there is good opportunities where you'll see markets move because it takes less money to move the market because there's less overall traders involved. Okay. Now, obviously we do focus on currencies a bunch in these Monday mornings since that's the only thing open right now. Now, currencies is actually a bit slower as well. It doesn't completely shut off, but it will slow down. But what it means is other pairs can gain ground or lose ground against the dollar without a lot of traders kind of fighting back. So you're typically going to see most of your movement now, pretty much European session, but Asian session actually has the ability to move the markets as well a bit. Again, because there's not as many dollar traders in there. Again, if you're familiar with currencies, you know that market never actually closes, but yeah, we got to be cautious of what happens when there's low volume there. So with that being said, for those of you that are new, my name is Bryan Caprice. I'm the president and CEO of Keep Trading Simple. For us, we try to keep it simple and remove a lot of the distractions that professionals throw into the markets. You need to have these 97 different super secret indicators and this and that, and unfortunately, that's not what you need. Most of the best traders that I know don't use any indicators whatsoever, or they'll use one for a confirmation of what they see in their head. They use price action. So you'll see me talk about price action a lot today, and I'll use that in a lot of my analysis. You guys will see some boxes and things like that. I typically mark off areas of buying and selling, supply and demand. I'm sure you guys are familiar with those concepts. But what I do is I basically, I use price action, candlestick formation, wicks, bodies, that kind of stuff to kind of uncover where I see things. I'm not one of these traders that spends 18 hours a day in front of a computer. I don't believe that that's the way to truly trade. I believe you should enjoy life, not enjoy sitting in front of a computer screen. So I've created things like the 30-minute trade or the 5-minute binary courses, smaller time frame type trading, really using set and forget type mentality. If this, then that, and walk away. Again, the biggest weakness for any trader is typically the emotional side of trading. And if you don't need to be there and you can rely on technology, use it, because the computer doesn't have an emotional side of trading. So that's what I focus on. This is the femme. They're all getting big. The baby is now just over 1. She's literally within a week or 2 weeks of walking. She tries to stand, and whew, she's everywhere. The other two, they're looking at charts. They're not trading yet, but they'll be there pretty soon. So it's pretty fun. Just obviously busy with 3 little ones running around. So with that being said, let's cover the Nadex risk disclaimer before we jump into news and charts. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and education purposes only, and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes including Forex, stock index futures, and commodity futures. Trading can be volatile, and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures that investors cannot lose more than the cost to end of the transaction. Nadex is subject to U.S. regulatory oversight by the CFTC. Make sure you understand what that means. There's many asset classes out there that you can trade, and they all have their pros and cons. But one of the biggest things about options, but particularly Nadex options, is it doesn't matter what the underlying asset does. You can't lose more than what it costs you to get into the transaction. Very, very important to understand, and it's one of the things that I love most. Definitely, if you don't feel comfortable with that, head over to the Nadex website and go to the Education Center, and they have a really good explanation of it there. Okay, so with that being said, let's dive into this week's upcoming top 3. Every week we highlight the top 3 news releases we think we're going to get some good movement on there. to get some good trade setups on there. This week, number 2 is kind of a split one, and I'll explain that in a second. But first one is going to be tomorrow night. Aussie, we've been watching their cash rates, and we've talked about it that they could potentially be in a mode to be, changing that, and it looks like it's coming tomorrow. There's a bit of gap in those pairs last night. Now, again, most times the cash rate changes are already factored into the market, but one thing that's a little bit different about the Aussie is that there are not a lot of other traders when those rate cuts go into effect. Okay, they are late. This would be 12:30 p.m. or 12:30 a.m. Eastern time. Again, West Coasters, it's a little bit easier for you to trade this one. Anybody else, overseas, obviously it's a little bit easier. East Coast, it's a bit rough. Nice little trades typically. You'll typically get some movement. When you see rate changes overnight, you will typically start getting kind of an overnight trend that occurs from it. After, obviously there's going to be a little bit of spikiness as retail traders are, reacting to the news. But typically some nice little setups that you can grab off of that one, particularly trends. And again, with a week of not a lot of traders, I mean, think about it. How many people are taking off July 3rd to go where they need to go for barbecues, right? So people are starting to leave. It could set up a nice little weekly trend for us, okay? Number 2 is the joint one. So there is ISM non-manufacturing and ISM manufacturing data. Well, manufacturing data is today, okay? It's in 2 hours from now, 2 hours and 23 minutes, actually. So manufacturing numbers are important for a number of different reasons. They're considered kind of a leading indicator of really where the industrial heartbeat is going. Is there demand to build new things? Are we building new things, or has the consumer pulled back off again? Everything that happened over the weekend, this is kind of all eyes on the ISM manufacturing data. And here, I'll drag something over the slideshow. You guys will see that the upcoming event right here, very, very big, right? The forecast is actually expected to be lower, and 50 is kind of a magic number. So we're starting to get close. Now, the reason why I didn't list that one is because, again, it's Monday morning. It is kind of a vacation week, and not everybody is fully online Monday mornings, okay? Typically, you see the biggest news releases later in the week. So that's why I think this is kind of a joint one. I guess I could do a 2.5, and that would be this morning's release. But again, these are also always right around that 10 o'clock period, which is the most popular time for a market reversal, okay? So I wouldn't necessarily be surprised if the market opens up, again, because of, Trump saying that, the talks went better than expected, right? So people are like, oh, that's good. That means the economy can get stimulated again. And then all of a sudden, if this manufacturing number comes in bad, which it's forecast to do, our economy's getting hurt. That could shoot, again, because it's forecasting what's already happening right now. That could shoot our market down, and it would be right around a 10 a.m. reversal. So watch for reversals this morning. Number 3 would, again, be an Aussie retail sales number. Retail sales has been a firecracker lately. When they don't hit it, it moves. And again, Wednesday, July 3rd, how much resistance is this one going to have in it, right? I mean, there's no U.S. traders trading it, so it's purely an Aussie play. And we don't get that many, chances to play just pure Aussie plays. I didn't pick any of the Fridays, and I'll go through the news in a second. There is a bunch of news on Friday morning, but again, I feel like there's so many different people will be on vacation. It's going to be a lower volume. I just don't think that idea is good. So I picked this Aussie sales as a retail number, and again, actually that one is 9:30 p.m., not 9:30 a.m. Sorry about that. I had to retype all these because it was July, not June. So with that said, let me drag this back over and give you guys kind of a highlight of the week of where we're looking. So this is just the main page. Great website. If you guys are not using Daily FX, get over there. There's so much stuff over there. For me today, we're going to go charts and education, go to economic calendar, and this is where we're going to kind of go down, and we're going to kind of change it. Make sure you always change the settings. Nothing worse than having the wrong time on here. Go to filters, we're going to take off mediums, and we'll actually leave medium on this one, and we'll go to Mexico, and then we'll go to the weekly view. All right, so you can see we had the Chinese manufacturing numbers, and again, Chinese manufacturing going down was a bit of a market mover last night with the Aussie pairs. So if you look going into Monday's numbers here, you'll see we had some speeches and things. We had some unemployment figures that were marked in the red. This is kind of where we're at right now, and this is that manufacturing number for June. Okay, again, expected to be lower. Definitely a big deal. Okay, whenever we get close to 50, that's where it's kind of everybody's off to the races, right? That'll give the newscaster something to talk about today. Heading lower, again, not a whole lot after that today. It pretty much just flat lines. Again, Monday of a vacation week, not surprised. Going into Tuesday, here's that cash rate, okay? Cutting it down to 1, okay, from 1.25. That's going to cause some waves, okay? Now, again, it's already factored into the market, so I don't want you to just all of a sudden, wait for that number. Once it's there, get long, or actually get short. But that's going to be a big deal. Watch for the kind of reactionary moves to this one. You have a lot of talks as well that day. Again, manufacturing in Canada, another thing. Canada is more of an exporter than a manufacturer. As you can see, they are below 50, but again, that number has the ability to cause some movement as well, and that'd be at 9:30 in the morning. And again, there's no U.S. data kind of counterbalancing it, so that's again kind of important. Dropping into Wednesday, you'll see there's a lot of U.S. news in the morning. Trade balance, jobless claims, and again, we don't expect the trade balance to be great. You guys can see it's actually going up here, and again, not surprising with the tariff kind of battles back and forth. The unemployment change, again, that number, it's not considered anything crazy, but this does have the potential to move as well. Again, 140 is not a bad number. This has been going up and up and up, and again, this is a number that, again, not talking politics, but this is a number that matters when you talk about job creation over a presidency. So there is some eyes on this number as well. Continuing claims, not too much. Factory orders, and again, this would be the big one on Wednesday, and that was marked as number 2, right? The ISM non-manufacturing / services composite. So this could be a nice little mover. And then again, for you oil traders out there, don't forget, oil inventories will be Wednesday this week, okay? And we'll see, this is a big one. We are now in summer gas. I don't know if any of you guys out there, did anybody go fill up their tanks this last weekend or in the last kind of 2 weeks? I know on the East Coast, it's jumped about 30 cents in the last 2 weeks as we've gone into summer gas prices versus the rest of the year. I'm telling you, they're like, oh, there's reasons to do it. It's like, yeah, so you can jack the gas prices on us. But oil prices, again, we'll see what the inventory numbers look like, and that'll be Wednesday. Obviously, July 4th, U.S. is closed, but you'll see there is some data for other countries. So you're unable to trade, that day for us. Going into Friday, okay, so again, Friday, a lot of numbers. Again, you have all the CAD numbers in here. You have the USM, change in non-farm numbers, unemployment rates. This is always a strange one because again, these are the non-farm numbers. But why it's weird is because how many people are working on July 5th? Okay, this is like the Friday after Thanksgiving. Only I think it's even worse. I think more people take off on in situations like this because it's nice and they can enjoy the outdoors, especially if the weather is forecast to be nice. So trade with caution on Friday. Like I said, the volume of everything will be much, much less. Some of the big movers, I mean, again, looking at these, unemployment rates and things. I mean, this unemployment rate, if it does magically jump to 3.7 or drop down to like a 3.4, you're going to get huge movement because there's not a lot of traders out there counterbalancing it. So just be cautious of that if you're going to trade it. If you're new to trading those, again, be a little bit careful with them because, while if the numbers are dead on, it's not going to move. If it does miss because of the low volume, there could be some large movement. Erratic movement that makes absolutely no sense, and it's just because less money is able to move the market. Okay, but I do like some of the CAD plays in here. Obviously, it's not it's not 4th of July for Canada, so again, you can definitely get some movement in things related to the dollar. Okay, all right. So let me drag this back out of the way. Let's put that there. Let's drop this down and go into some of the charts. So we've had, let's see, we're on the first pair. All right, so we've had a bit of a retrace in a bunch of these pairs. Now, this was an interesting trade last night. We had marked off this gap 2 weeks ago, I guess, when this gap originally occurred, and we said that this was going to be a potential entry area for us. And we ended up getting that, right? We gapped into the area and then kind of dropped in somewhat of a 2-to-1 type situation in that risk level. And then last night, again, we had this number that just skyrocketed up. It has already retraced at this point, so the trade is kind of done. And looking at this top left chart, this is the daily. And this blue area, I actually blew up a chart last week. So I know we changed this last week, but I had to hit not save because I ended up deleting something by mistake and I wanted to make sure I didn't lose it. This area was kind of a profit target back from this initial drop. Okay, and we talked about this wick being a problem area, right? You guys remember this? When you're reading price action, you're looking for candle formation with bodies and wicks. Well, this long spike here, that messes a lot of that up. And we knew that there's buyers in there somewhere, just didn't know where. And we watched price come down in it. And this is where it kind of, let's see, this level of basing right here, right? I'm going to leave this one in blue. Price did fall down. It hit those buyers where we thought it, somewhere in there, it hit, it confirmed, it went back up, and now it's been sucked right back into the same area, okay? Again, we were getting a nice little drive forward, but it fell right into this area. So again, it's definitely considered a sideways movement right now, okay? We got a bit of an entry here, and you guys can see we gapped up and then retraced back to the start of the gap. So this was a Sunday night play. A student of mine sent me a message that he got into this one. It was a great, great call, and we've just kind of baseline and stopped. So we'll see what happens when the ISM manufacturing numbers come online this morning. This one probably will give us a little bit of movement, but it's also going to start pausing because it's going to be waiting for that rate decision call, okay? So if you're going to trade the rate decision tomorrow, or I guess late tonight, this would be one of the pairs to look at, okay? You guys can go in there with 2-hour binaries would be good. You can, kind of target some of the later expiring ones if you'd like to get the premium a little bit lower. This is where you're looking, okay? So for me, couple things that I'd be looking at. I don't think price can get all the way back down to the 74. That'd be about a 100 pip move to the downside. I don't think we're heading that. I don't think we can go that far. But what I would do is, let's move these out of the way. I'm thinking, as far as 4-hour areas that I'm looking at, obviously be cognizant of this area. If price is able to rally back down again, look for this as whether a takeoff point up or a break and retrace to continue back down. And if it does, then yes, then I'm looking to go back down to the 74.50-ish area. That's priced about 120 pips from where we are right now. That's definitely possible. This pair has an ATR of about 52, so it's not the biggest. Again, it can move about 2 Nadex strikes on a regular day. Adding a rate decision in there obviously can increase that a little bit more. Typically, you expect about 70 to about 150% of what it does in a news release. Rate decisions are a little bit bigger, okay? Unfortunately, the top side, it's a little bit choppier. It's a little bit more, again, we have a lot of, here's kind of the area that it bounced off of right here, okay? And again, it's been confirmed here one time, and we've hit a second time and gone pretty deep. If it goes one more shot up, it can break, but there's some sellers sitting right here. That's what initiated this last gap down again. So that's kind of the 2 areas that I'd look for. If you wanted to be a little bit more conservative with it, again, just bring yourself up to about there, just slightly higher than where we were. So it'd be kind of a selling area if price spikes, or again, down here, we're waiting for the price to be in this area when the rate decision occurs to either go up or break, touch, and then collapse down into kind of this section down here. Change this to green real quick just to make it a little bit clearer for you guys. Something along those lines is like a profit target, okay? This zone is in the middle, so that's why I'm using this, whether there's a bounce higher or a break, touch, and lower, okay? Let's look over at Aussie dollar, okay? Aussie dollar went higher than what we talked about last week. We had mentioned this nice little zone here, and it got broke. I mean, it pulled back and then kind of rallied right through again. So most likely if you had used that kind of this basing level here, you would have taken either a small loss or gotten out of some type of a break-even trade. Now, similar pattern with this big spike up. We had ended the week kind of in this kind of selling area. We'd seen price here before, and it did just go slightly higher. It opened, but then immediately just boom, it just collapsed and dropped right back down again. So where this one is, and with the data coming in as it is with rate cuts and things, typically when you lower your rate, it is weak for your currency, or it makes your currency weaker. There's not as much draw to send money there, okay? That kind of sets us up for somewhat of a retrace. I'm going to leave that one there actually for later. So this is kind of what I'm starting to look at as far as a retrace goes. Price coming back down to the 68.50 area. We're about 70 pips from where it is right now. This one obviously is starting to shrink. Its ATR is down to 40. And again, because it's summer, we're starting to not, I mean, the chart actually looks more like this versus, making it exciting. It's more of one of these things, but we're definitely in the area where you can see kind of we're at the upper end of the base right here, right? Down, up, down, up. So again, this would give us a nice little target as well as a continuation of this box down to the 67 range. So, but again, 68.50 would be the first target that I'm looking for. That's the last time when we found buyers. And again, we can wait till we have somewhat of a confirmation here. And what I mean by confirmation, let's wait to make sure we have a color confirmation. Get the red, get the green, get the red again. Close of the red would be somewhat of your entry to the downside. This could be a position too. If you guys are looking at weekly binaries, this could be worth taking an out of the money weekly binary down here somewhere. Again, maybe the 68, 80 range, or the 75 range, I guess would be the better one. Again, play this to the downside. The cost of entry is going to be rather low. Again, lower chance, lower percentage, but it does match up to what the strategies are. Upper end of a channel, pushing lower. This is a lower low than here. Again, we're supposed to get some bad news for the Aussie. They're lowering their interest rates that help stimulate their economy. All these things kind of stack up as far as odds enhancers, hence why I prefer an out of the money in a situation like this. This one I probably wouldn't use a daily play. There's a bunch of little buyers in here. For me, this would be kind of longer term trade to see how we go for the week. Okay. Dropping down and going into the euro pound. All right, so this one you'll see is kind of, again, we ran right up into this area, right? This top kind of selling area, and it's interesting. We bounced, we went lower, and then it kind of came up again. So it's having a hard time with this 89, 70-ish area. It's literally at the top of the curve, but it keeps running into sellers up there. So looking at this week, it's interesting, okay? The pound still isn't really sure what they're doing over there. Again, there is some European news this week. Looking at, let me drop the scanner just to low real quick. Hold up. That. All right, so we had some today. Carney is speaking again tomorrow. Okay, that's going to be helpful, and then that's the high. That's like the last bit of the high news for this week. So it's really going to be European numbers probably moving this. And again, any type of European weakness or pound strength is what's going to send this down. Okay, with other economies talking about slowing. I think that's where we're gonna get some movement in this pair. I don't imagine this one will be the highest mover this week, but I think it is setting up to start moving. Okay. When you're looking at a lot of the different sentiments, like you're seeing across the board, you're seeing that euro right now is bullish, but the pound is bearish. Okay. That continues to move into this, but where we are is we're in an area of sellers, which could easily flip that back and forth again. Eurozone unemployment came out, and it's the lowest level since 2008, but there's not anything that really sent this thing going through the roof, meaning that the sellers above this, in my opinion, are pretty strong. I mean, think about it. If it's the lowest Eurozone unemployment rate since 2008 when we had the global crisis, why didn't this thing skyrocket through, right? Okay. And again, Eurozone, again, not Great Britain. So for me, I think all we're waiting for is some bad news in the euro for this thing to start retracing back down again. And it's about finding the right entry. Again, it's a little bit choppy in the lower time frames. This 4 hours literally just back and forth again weekend, but even last week it was just kind of like kind of all over the place, and the 30-minute is no different. All right, so still waiting for something here. Again, great European news, but I don't see it skyrocketing through this area. It's kind of gotten stuck, hasn't gone as high, and it's already showing kind of retraces back. Doesn't look as great for me. Okay, going into euro yen. Okay, euro yen. This one, it's definitely a bit spiky, right? The gap in this one just literally skyrocketed back up, and again, it's retraced, right? You guys can see here's where the gap occurred, right? I'll mark it off so you guys can see, clear right there. And boom, went up, went right above this zone. But you guys see, maybe you guys can see this pattern real well right here. You guys see this right here? Now again, this is what we're talking about, price action, understanding how the candles are formed and what the wicks look like. So whenever you have a situation like this, it's kind of it's either a pullback peak or a bottom peak, and you see that the candles are descending in the direction of the trend. In this case, they're descending. If it was obviously flipped upside down, it would be ascending candles. It shows you that there's definitely an area of sellers there. Now again, that's what this pullback here bounced off of. If you take it to here, right? And what happened is this one went slightly higher in this big kind of new spike up and retrace. It hit the same area. Okay, these two descending candles down here. So we're in an area of selling in this one. So again, it also coincides with what we saw in the euro pound. Again, great news, and all it did was shoot back up and retrace. Okay, it had that initial kind of retail reaction and pulled back down again. You think lowest since 2008, man, you're fixed, everything's good, wonderful, keep going. But no, it pulled back down to where we were right before the news release. Okay, so again, same analysis. It's definitely something I'm looking more to get short on than long. Yes, it did push higher, but immediately retraced back down again. and then started to form, candles to the downside. And again, especially on the 30-minute over here, we pushed down, grabbed these orders, went down again, went deeper into this area. So if it pushes again, I believe that this area is going to fail to the downside. So this is something I'm keeping an eye on. If you're going to set an alert, I would set my alerts in probably in, if you're going to set an alert, I'd set this probably in this 122.60 range, 122.65. That gives us kind of the start of this move. I'll turn this one yellow so just so you guys can see it a little bit more clear of where it's at so you can find it on your charts. Yeah, you guys should be able to see it there. So it's right a little bit into where this original gap candle was on the 30-minute. And here's why, okay? If this pushes down again, every time you run into an area of buyers or sellers, every time it hits it, you're going to chip more and more and more buyers and sellers out of it. Eventually, there's going to be none left and it's going to break. Well, we went into here, we found buyers. We went again, we based, chewed through them, went lower, made another push and hit the very, very tip of this, right? I mean, this blue square is basically, this blue square is basically this right now, right? So when we make the next push and attempt through, it's not very large to break through. We can push, and again, I'll use this as a catapult to the downside, okay? Looking for a break of the blue, a retest of 122.50, and then have that start to push down again. This is not the best area because, again, these are descending, not ascending. Really, for me, the 122 area is kind of what I like. So we could get about a 50 pip mover on this one. So this is definitely what I'm looking for. It coincides with what we're seeing on the euro pound also, okay? Drop it down to the euro dollar. Now, the euro dollar is one of those ones. One of the nice things I do like about daily FX that's a little bit different is it gives you sentiment based off of what the not only open interest is, but how many people are long and how many people are short. There's a bit more of a kind of, I guess, bullish sentiment, but again, we're kind of in that position where things are starting to retrace. Now, we talked last week. We talked about measured moves, if you remember that, okay? Let's see. Here's the first. Last week would have been the, was it 24th? Okay. 24th would have been here. And we talked about we were at the very, very top of this measured move, okay? This measured move, again, was drawn off of this prior measured move. And you'll see we've had some pullback. And it actually, we talked about this Wednesday, that the way that this ascent happened, no real pullbacks, no candles. It was basically just straight up every day. This was opening us up to what we would call a racetrack again, right? Those pullbacks. And that's what we're seeing, okay? We did mark off this level of basing here, and we kept it because we said if price is able to pull back, this is going to be a problem area, okay? And it did. It went almost all the way up. We missed this little entry on the 4-hour by, on this chart, let's see, by about 6 pips, okay? It hit the upper range, and then continued to push back down right back into the prior zone, okay? And this, again, this zone was, we marked it off and left it on there even it was broken. One, because price reacted here, and then if you guys look, there's actually a wick against a wall right here. Okay, it's a little bit lower than the actual zone, which is right there, but it's right in there, showing us that it's still, was a viable profit target. And that just hit, okay, a little while ago to the downside if you're able to catch it. So this one is very similar. This yellow area, this level of basing right below where we are gives me slight worry to the downside. I think we may have a little bit of a pop, but if we're able to get into this zone and break this 112.85-ish area, for me, I think our targets are going to be down here in the 112. Okay, and again, this would be dollar strength, euro weakness. Matches the same thing to what we've seen on the other 3 pairs, especially on the daily. And again, this measured move is nothing magical. It's basically just taking the last major pushes up, and you'll see that the market tends to repeat that. For those of you that were following, we hit it, I think it was 4 times here. I ended up using the one over here, but we had it here, 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 and here. This last one, when we measured it from here, it only made it about halfway before it ran into the same sellers here. In this case, same thing, measured move here, and they are basically the same height. So it's a very, very common kind of short-term trend in the euro. It's a tool that a CMT taught me, and it's kind of funny when you draw it on the chart and it literally goes right to the area and then turns and flips on you. It's like magic, one of my students says. But again, where we are right now, I'm not ready to sell this one, although you are seeing it sideways down biased, and it is a downtrend setup, but I needed to clear this area, and really it needs to clear below this, this area, because the basing and kind of takeoff point right below it. So a little bit of a delay on this one, but I think, again, ISM manufacturing number will be affected by this. Again, if that comes in a surprise number and it's good, that's going to probably shoot us down into this 111, probably 96 area. I think it'll clear or 112, I'm sorry. It could clear 100 pips on this one. Daily ATR is 57 as well. All right, going to pound yen. So pound yen is it's getting kind of the most disappointing award for the last 2 weeks. The ATR on this one is down to 92. It's getting lower. You guys will see. Last week I talked about how it came down and it was just starting to base sideways, and it did. I mean, it was inside of this range, and you see, I extended this on Wednesday, right? It went down, it went up again, it went down, it kind of went up, and it was stuck. It closed at the top end of the channel, and then it gapped up. But what did it do? It pulled right back down again in this gap. Again, this was the weekend news from the Trump tweet, right? But if I extend this out, right, I'll extend this area to the side. You'll see, where are we again? We are right at the top, okay, of the range. I can probably change this to make it a little bit easier. Let's see the area. Let's just do transparent. Okay, you guys will see that. So that's really where we've been following. And again, I talked on Wednesday about how it's kind of been shrunk, but again, and then it shrunk a little bit more. So you're kind of in this kind of sideways holding pattern. Again, it's very rare that you see this pair. I mean, even when you look back, it's very rare that you see this pair spend that much time basing in such of a narrow area. And you can see we are just literally sideways. Finally broke a little bit out the top, but again, it looks like a red candle. It's pulled back right inside of the area. So for me, I am more short biased. I know that it's saying it's an uptrend. It's an uptrend setup. For me, I am definitely more on the short side. And again, the trade in this one would have been last night, taking it on the Sunday gap to trade it to the downside. Okay. This is not one that I would put a weekly position on right now, just because there's no really true trend. And again, if you guys do like indicators, this is one of those ones you could throw an ADX on there and see if we actually are high enough. I don't have one on the chart right now, but I believe the answer would be no. We're not really trending. We're just basically moving sideways. Okay. Shorter term, again, you can play this back and forth, but that's to each his own. Follow your risk guidelines. Pound dollar. Okay. Pound dollar is kind of doing something similar. Not quite to the same extent. It's not bad. It's dropped, obviously. Again, you'll see the same kind of drop down. And this is an area we marked off last week. The way that this level based and the way that we reacted last time it touched this area, it's come back down and it's touched it again. Okay, so we are smack dead in the middle of the buying area. And you'll see on the 30-minute, right, we hit the area and now we're kind of just basing back and forth. But, it's dropped a little bit lower. So it's kind of, let's see. This is kind of what it looks like, right? And again, very common pattern. You'll see a lot of people will say if it breaks the the bottom side of this base because these are descending, yes, you can go short. And yeah, that's if you are a candlestick pattern follower, you'll see that a lot of times, right? Fast, kind of a slow kind of pullback, and then when it breaks, the area right here at 126.34, that's an entry for a lot of people if you're a candlestick follower. And again, it's not a bad entry. Due to what we have over here, that would be down at 126.32, 126. What is it? I'm sorry, 126.36. 126.33 is here. It needs to go a little bit lower. So for me, I'd much rather see it kind of make a push down and then come back up and retest this same kind of 130, 126.30-ish range, like kind of right here. If we can break the bottom piece of this blue and retest up a bit and then pull that, where I'd be looking. I do like the formation on the 4 hour. Okay. I do like this kind of area right here to take over as a potential kind of profit area, okay? It's getting the entry to make sure we don't get faked out. This is a very easy kind of support and resistance trap. They're like, oh, I'm gonna go short here. Yeah, that's where there's buyers in there, but there are some sellers right above where this level is. So again, the target we drew last week, again, held based off of the reaction. We'll see if it goes, again, I like this one more short. Drop in dollar CAD. Dollar CAD, again, nice push last week. I wasn't sure we were going to be able to get through this kind of lower area, and it did. Okay, I'll shrink this up a bit. Oops, bring this. Actually, I think we moved this last week. That's kind of where we're at, right? We had this level of kind of ascending wicks. We saw a retracement off of it. So we're on the very, very bottom side, down at this 130 area. 130 is pretty low, just like 135 when we're talking about the 135, 136 area. Those are on the higher side. We're in a rather low area right now. It's basically at this point, again, U.S. traders are not in. You can see this is a very common thing we see on Mondays. It's really, really flat, and we had this blue line in here, this 131 is kind of a target where if price continued to push through that area, that's where we're going to look for. it hit that, and it's actually dropping a bit lower, and then it's now sideways. So I would definitely keep eyes on this one. Manufacturing at 10 o'clock today will move this pair as well. This one has about a 65 pip ATR. You can trade this one even down into the 5-minute binaries, but be careful. The 5-minute binary spreads are a little bit higher than, say, the euro dollar on this one. So this one would be at 5 at all times. Definitely have some tradable opportunities in this one if we get a nice bounce from the ISM numbers. Don't forget, the ISM manufacturing numbers will also be, the non-manufacturing will be on Wednesday, so that's another potential target for this one. If I had to pick a sentiment for me on this one, I'm probably more on the bullish side. I know we have downtrend set up here because it obviously downtrend. It's green, but we are in an area of buyers. As fast as this has gone down, I think any dollar strength in this one will shoot us back up again. And again, you got some kicking around right here below it. So that's what I'm looking for. Again, I need trend. I have no trend right now. I will be looking at this one at 10 to play somewhat of a retrace. I'm waiting for an ISM pop, and then I'll probably look to play a retrace back again off the market reaction. Okay. Going into dollar Swiss. Dollar Swiss is hit that bottom level and kind of retrace, kind of what we were looking for over there. Bit of a gap, starting to retrace it back, a bit back again. This one had really far to go back to parity. Didn't quite make it. It kind of stalled out on us. Again, we're seeing kind of it rally back up. And again, it did breach this wick over wick right here, which is good over this 98.35. So we do kind of have clear sailing back up to the 1, which would be kind of what we're looking for here. One word of caution. Again, we're about 80 pips. It's not going to do it today. Right around this 99 area, where this gap hit, you may hit a little bit of a speed bump before we go all the way back up to parity. So just keep an eye on this one. Like I said, I don't trade this one as often. It's given us uptrends in both directions. A bit of a retrace now. I think this is probably more just preparing for the manufacturing number. This will obviously match. Manufacturing will move this one as well. Okay. Last but not least, the dollar yen. So dollar yen had its gap. It spiked higher. It retraced back. And again, this one has not filled the gap. It just kind of held where its gap was, and it gapped right into a daily level of supply. Okay, you guys will see. I'd say it's an ugly supply area, but it spent a lot of time there, and then we had a very explosive movement south from 108.50 down to 107. Okay, it shot, it launched itself down, and it gapped into that range, and it's basically just stopped. Okay, so if you look on the 4-hour, again, you can see it on the 1, but if you look on the 4-hour, okay, a lot of time was spent in here. Again, little area here, little area here. The yellow line that we marked off last week was really the first clean line where price has been unable to breach it yet. Tickled it here, tickled it here, tickled it here, didn't quite make it here, and then this happened, but it didn't rally all the way up. Okay, so this is an area, the 108.75 to 108.90. This is kind of 15 pip range. ISM manufacturing has the ability to spike up to this area, and then that would be a sell point for me to take this to the downside. It's very small risk. You're talking about, what, 15 pips in this one. Definitely something that we could take for a spike, or this could be one of those ones that, like, the numbers are really bad, but you see this one go up, and you're like, why is the dollar going up based off of this number? Again, it's kind of the retail reaction, people trying to get short, getting in when they see the number. Price goes up, stops them out of the trade, so somebody could get this for a better price, and then it will continue to push back down again into the kind of 107 range. So depending on the ISM manufacturing number, we'll see what this one is able to do. But again, it'll be the CAD and this pair that I'm looking at. Again, look for market open. Again, see we'll see if we can get the kind of rally, the push forward at U.S. market open. That's what this one will do as well. And then the ISM manufacturing number could be what puts the nail in the coffin to head back down again. It's a bit far. I would have liked that this had traveled more. I would have liked for this one to have the ISM manufacturing number at the 108 level, or this 108.90-ish level, be in this zone, but we're not there, so I'm going to be looking for somewhat of a retrace. And again, that would be a play off of this, a play off of this, somewhat of a play here, refilling the gap, but it's got to move. It's got to go back down to the 107 area for me. Okay. All right. So, how do you add rows to Forex scanner different times? Bob, great question. How do you add rows to that one? Just go over the top into settings, and you'll see how it says like number of instruments, and you'll be able to see it all over there. To the very, very top. What he's talking about, guys, too, is at the top of Forex Factory, how I have the scanner. He's talking about all these things. Okay. Go into settings, you'll be able to add these things. Rows, columns, it's all under the settings. pretty much any of these websites that has news in it will always have some type of a scanner. Look into it there. Again, I use Forex Factory and Daily FX depending on what I'm doing. All right. So that should answer that for you, Bob. All right, guys. So with that being said, it is 10 after. I'm going to let you guys go. Have a good week. Have a good 4th of July. I will see you guys next week. And, hopefully we get some good trading opportunities with the lower volume for the week. So take care, and I'll touch base with you later. Bye-bye.